Right. You need to get a copy for yourself, get for people, so that people can know how to, study and understand accounting based on JD's perspective. Be a good person, very good person. And then, what do we do? Should we say, rest in peace to Sam Sultan? Not like we really know ourselves, and we don't really know ourselves anymore. But let me just do one for him. I don't know if you remember this word. Okay. Well, rest in peace. Fafadilu. Let me put it here for you. All right. So in this class, we'll be looking at accounting. As a matter of fact, we've been on this series for accounting, for shares issued to the public, payment in full. Previously we looked at, issuing of shares at par. We've looked at shares issued at premium. We've looked at shares issued at discount. Okay. And then remember I told you that when you issue shares at what? At par, it means that what? You're issuing at the same value that, we have the share to be registered. And this issued price is the same thing with nominal value. Of course, if it is at premium, the issued price is higher than the nominal value. If it has discount, issued share is less than the nominal value, and I explained that in our previous classes in this shares issued series. And then today we're going to be looking at accounting for let's call it over subscription of what? Shares. Okay, so what I'm talking about here is very simple. What we are saying here, from the word over, it means above, right? So it means that if, for instance, you invited the public to subscribe for your shares, that is, they should come and be part of owners of your business, of your company, but they are paying you, right? That's what we mean by issuing shares, okay? But in this case, if, for instance, you said, okay, I am issuing 1 million shares, okay? It can be 10 million, it can be whatever number of shares you're issuing. But for the sake of argument, you're saying 1 million shares issued, right? Okay, now assuming we got applications for 1,500,000 shares. okay, applied for, you can see that what we issued 1 million shares, but there was an application for what 1,500,000 shares. So what that means is that what the unit of shares applied for is higher or more than the unit of shares that have been what issued. So what this means is that what there is what an oversubscription of what shares, or we can say that what the share has been what oversubscribed. So what I'm saying is that instead of you getting application for 1 million, you got 1.5. So we have excess application of what 500,000 what unit. So typically what this means is that what you have to find a way, to ensure that what there is a parameter with which you reassign the shares to what the applicant, such that what you still have your 1 million shares what issued in that sense. So most cases, or in most instance, okay, what happens is that what after receiving the application, the excess shares are usually what returned. So what I mean is that you have received money for 1.5 million shares from various applicants. You might want to prorate. Okay, when you prorate, it means that what you apportion or allot the share based on certain parameters, such that what everybody gets some units, and then the excess money is returned back to what applicants. Sometimes you can want to do, maybe if you have people, maybe anybody that applied for 5 shares, gets maybe 3 shares. So what I was saying is that you're trying to work around the unit you have issued, but in this case everybody cannot get what they applied for. So if you apply for 5 shares, you get what 3 shares. Consider we're trying to what reduce the unit that what each person wants, so that we can work around what is available. So most times there's what we call proration. So you prorate such that what share is now redistributed among the what applicants around what the unit of shares that the company has available for the applicants. So it can be 5 shares to get 3 shares. It can be 4 shares to get 2 shares. It can be 10 shares to get 3, depending on the level of oversubscription. And don't forget, oversubscription does not have anything to do whether at par, at premium, or at discount. So you can have oversubscription at any of the instance. You issue at par, you can have oversubscription. You issue at what premium, you can have oversubscription. You issue at what discount, you can have subscription. So what I'm saying is that the methods of accounting for what at par, at premium, and at discount remains the same, but the procedures we are now bringing in is the proration. Okay, and then accounting or raising journals, okay, to account for the returns of the excess shares. So typically, because we're looking at payment in full, what it means is that they have paid in full, and then when we prorate that unit that we did not give to them, we have to refund the money to them. So that's the simple approach to explaining it. Okay, someone is giving you say 1,000 naira for 1,000 shares, for instance, and then the person could not get the whole 1,000 units. So if you get that person 800 units, that means the person is supposed to pay 800 naira. So what simply means is that you have to refund that person 200 naira. Remember, we're looking at payment in full. So in this case, you have to be able to raise journals, okay, or to accommodate that a refund that you're making back to the applicant. And then if you have to raise draft or checks, or transfers in this case that we have now, because we don't really have to raise checks anymore. You can always do your transfer from the office. So find a way to refund the money, okay, to the applicant if they are not going to get the share. So in summary, what I'm trying to say here is that where there's an excess subscription, typically the company might prorate and then allot shares based on what is available, and then excess shares or excess money received for shares applied for are returned back to applicants, and then whatever share has been issued is reflected in ordinary share capital the bank also has a reflection of what has actually been received for the shares that has been issued. And then we have the adjustment. If it is premium, remember, your premium is your reserve. It increases your reserve. If it is discount, it decreases your reserve. So par, there's no excess on the shares issued. So what I'm saying is that your oversubscription can come if shares are issued at par. It can come where shares are issued at premium. It can also come when shares are issued at discount. So the accounting procedures remain the same, but you have to find your feet to account for what the excess is, and then raise appropriate journals and draft or transfers to account for the refund. So if you have questions, you can reach me on the numbers displayed. I'll be there to reply you with the right answers. So let's quickly take this simple question and then understand how to account for that oversubscription. We have the following represent the balance sheet of Sultan PLC. Okay, we have statement of financial position as at 31st December 2010. So we have non-current assets, current asset excluding bank. Then we have total asset there. We have finance by liability, short-term liabilities 300,9750, reserves 4.3, ordinary shares we have 2.5 million there. Total liability there we have 987,9600. So now we have on the 1st January 2011, 1 million ordinary shares of £1 each were issued at £1.10 per share. Application for shares we are received as follows. Category A, 100 applicants for 1,000 shares each. Category B, 200 applicants for 2,000 shares each. Category C, we have 300 applicants for 4,000 shares each. It was decided to prorate the available shares on the basis of units applied for by each category for even distribution among applicants of each category. Show the necessary entries to record the shares issued. So here I can see that we had 1 million shares issued, but somehow they've grouped the applicants into various categories. I have category A, category B, category C there. So we have 100 applicants, applied for 1,000 shares each. Of course, that would be 100 times 1,000. We now have 200 applicants applying for 2,000 shares each. That would be 200 times 2,000. So 300 applicants for 4,000. So we don't even know how many shares was applied. So we have to find a way to identify the shares applied for, okay, before we even know what to do. So let's quickly look at this. Let's quickly look at this. Okay, so we'll call it Sultan PLC, right? So we have, let's look at them. Let's get let's say units, unit of what? Shares applied for, okay? So we have category A. So let's call that CA. We have 100 applicants for 1,000 shares each. So that would be 100 times 1,000. I think that will give us 100,000, right? 100,000. And then the next one we have category B. So let's call that CB. What do we have? 200 applicants for 2,000 shares each. So we have 200 applicants times 2,000 shares. So that will be 2 times 2 here. That's 4, right? That's 400,000 units, right? The next one we have category C. Let's call that CC. So they have 300 applicants for 4,000 shares each. That will be 300 times 4,000, right? So that will be what? 3 times 4, 12. That's 1,200,000. So total shares issued, total shares applied for. Total shares applied for. That will be 1.2 plus 4, that's 1.6. So that's 1,700,000 shares, right? So we have total shares 1,700,000. So we now have oversubscription, right? So unit of shares was issued. What they have? 1 million, right? So unit of shares applied for 1,700,000, right? So that means we have what? Over subscription to be what? 700,000 what? Units, right? But now they're not saying that. They said, well, it was decided to prorate the available shares on the basis of units applied for by each category for even distribution among the applicants of each category. So that means that what? We have to what? Since what has been issued is 1 million, but what application that was got was what? 1.7. We have to find a way to what? Apportion this 1 million among these categories, right? So what does that mean? It means that what? Category A, you're going to have 100,000 over total shares is what? 1,700,000. What's available? 1 million shares. So how many shares will category A get? So where's our calculator? Let's get our calculator. Divided by 1,700,000 okay, times 1 million. So I see 58,822. So I have 58,824. So category A, the 100 of them will share 58,800. Sorry, yeah, 58,824 unit of share. So instead of 100,000, they have to share 58,824. So the next one, category B, we have 4. Excuse me. So we have what? 400,000 shares over 1,700,000 shares times 1 million shares. So what would they have? What would they get there? So we have 400,000 divided by 1,700,000. Okay, multiplied by 1 million. I can see 235,294. 235,294. So instead of 400,000 shares, they will get 235,294 shares. So category C, they applied for 1.2 million shares. We have 1.2 million shares over 1,700,000 shares times 1 million shares. Okay, so what do we have? 1,200,000 divided by 1,700,000, okay, times 1 million. I have 705,882. 705,882 approximately. So instead of 1.2 million shares, they get what? 705,882 shares. So if we add this to this to this, it should be approximately 1 million. So we're trying that now. That's plus what? 235,294 plus what? 58,824. So we have 1 million shares. So basically, we have been able to what? Prorate the what? Unit of shares issued such that what? Each category what? Has a new unit of what? Share. So category A, instead of getting 100,000 shares, they will get 58,824. Category B, instead of getting 400,000 shares, they get 235,294. Category C, instead of getting 1.2 million shares, they get what? 705,882 unit of what? Shares. So that has been established, right? So what happens? Let's raise the what? The ledgers now. So what are the ledgers now? So we have our bank. Remember, at this level, you already know your double entries. If you don't understand your double entries, I will advise you to go and take your class on double entries on Jados Consulting. So when the applicant sent in application, remember the payment is made here. We're looking at scenario where payment is made on application and it's in full. When applicants bring in money, when they apply, they will pay into the bank. So that means the bank will be receiving, the bank will be debiting. Asset to include. But then the bank, we have a balance in the bank, the 1,659,800. So there's a balance brought forward, 1,659,800, right? 1,659,800. That's the bank balance there. Yeah. Now, application was received for what? 1,700,000 shares. 1,700,000 shares. And remember, we issued at what? 1 naira 10 kobo. So if we say 1,700,000 shares times 1 naira 10 kobo, so how much do we have? So that will be for what? Application money, right? So what do we have? 1,700,000, okay, times 1.1, 1,870,000. So we have 1,870,000. Remember, you are issuing at premium here. Nominal value is 1 naira. We issue at 1 naira 10 kobo. So let's say 10 kobo was premium. Don't forget. So now this is what we receive from the applicants for 1,700,000 units of shares. But remember, we did not give them all, right? We apportioned the word shares. So by prorating. So it means that at the end of the day, we were only able to still issue 1 million shares. Just that each category did not receive their full words application. What I'm saying is that, yeah, we were able to issue all of them 1 million shares. But what was applied for is not what they got. For instance, category A applied for 1 million, but they got what? 58,824. B applied for 400,000, but they got what? 235,294. C applied for what? 1 point, but they got what? 705,882. Right? So it means at the end of the day, what we actually issued eventually is still 1 million. So we have to refund them the excess of what? 700,000 units. Right? So 700,000 times 1 naira 10 kobo. What do we have? 1.1 times 700,000. 770,000. So we're going to refund money back to what? Applicants to the tune of 770,000, right? So by the time we refund now, we have a new balance. So we say balance carried down, right? So what do we have here? 1,870,000 plus 1,659,800. So what I have 3,529,800. So if we take out 77,000 minus 770,000, new balance would be what? 2,759,800. So that would have 3,529,800. So the new balance now will be 2,759,800. That is for the bank. Now we have what? Application. So application. Here we have bank. The money paid to the bank, Abi, is 1,870,000. We refunded how much? 770,000, right? So that means if we refund 770,000, what do we have? 1,870,000 minus 770,000. We have 1,100,000. Now that 1,100,000, let's do it here. That 1,100,000 is what? 1 million times 1 naira 10 kobo. So the 10 kobo there is premium, which is more like 10 kobo times 1 million. That's 100,000. Then the 1 million there is real ordinary. I told you that ordinary share value does not change. Any excess, which is premium, goes to the premium account. Then if there's a decrease, which is discount, goes to discount account. But here there's a share premium, of what? 100,000, which is the 10 kobo here. So we're going to have to take ordinary share capital now to be what? 1 million. Okay? And then we now have what? Share premium to be what? 100,000. Right? So that your application is settled. Right? So now you now have what? Ordinary share capital. Credit, debit. So what's the opening share capital account there? Share capital there we have 2.5. So we have balance brought forward 2,500,000. Now the new shares issued, ordinary share capital issued there is 1 million, right? So we have the applicants there taking what? 1 million. So our new ordinary share will be what? 3,500,000, right? We have carried down of what? 3,500,000. So there's a new ordinary share value, right? So what's the next one? We have our what? Share premium. Where do we put our share premium? Let's put our share premium here. So let's see. Share premium. What's the share premium here? 100,000 from the applicants, right? This is credit, this is what? Debit. So we have the applicants here. How much? 100,000. So carry down there will be what? 100,000. So both sides will be what? 100,000. So there's a new balance of share premium, which is what? 100,000. So at this level now, let's show our what? Our statement of financial position. So we have statement of what? Financial what? Position. That will be as at what? 30th March. Sorry. Is it March? When did they finalize the issue? When did they finalize the issue there? Yeah. 30th March 2011. 30th 11. Okay. So we have non-current what? Assets. So what's the non-current assets? 5,362,000. 5 million. What do we have there? 362,000. 362,000. So what's the next one we have there? Current assets, excluding bank. Current assets, excluding what? Bank. What do we have there? 2,857,800. 2,857,800. Then bank, because there's a new balance for bank now. What's our bank here? 2,759,800. 2,759,800. So what else? That's all. So when you add up, what do you get? We have 5,362,000 plus 2,857,800 plus 2,759,800. So I have 10,979,600. 10,979,600. 10,979,600. So this is your what? Total assets. So let's go to our liabilities. We can call this now our assets. Okay. So let's go now our liabilities now. What do we have there? Short-term liabilities there. short-term liabilities. What do we have? We have 300,9,750. 300,9,750. Yeah. Then we have reserve. What's our reserve? Our reserve will be what? 4,369,850. 4,369,850 plus our share premium now, 100,000. So what do we have? That will be 4,469,850. 4,469,850. Right? So let's add 300,9,750 plus, let me take it 1 4,369,850 plus 100,000. I have 7,479,600. So we now have our what? Ordinary share capital, which is the new one here, 3,500,000. 3,500,000. So if you add up, what do you have? Plus 3,500,000. I have 10,979,600. So this is your total liability. So you can see that total what liabilities is the same thing with what total what asset. 10,979,600. 10,979,600. So this is actually issuing of shares, okay, with what excess subscription, what we call over subscription. So we're able to account for the shares issued with what excess subscriptions in it, and then we showed how to what adjust for what the item of what excess or over subscription, and then we raise the ledgers, and then prepare the what statement of what of financial position. Okay, so you can go through it. If you have questions, you can reach me on the numbers displayed. I'll be able to reply with the right answer. But don't forget, you can support us by paying to the account displayed, or pay for copies of my textbook that we'll distribute to students for free. Thank you.